Hey everyone, Abaroa for Financial Intelligence Training. It's Friday, it's August 3rd, and it's 2018. And even though we all have already heard, I have to mention Apple, $1 trillion. That's amazing. But what I bet many of you don't remember is when Apple was a $400 billion market cap, that David Einhorn came out and said that Apple could be $1 trillion company, and that was back in 2012. Now, I'd like to take some credit there, not for remembering such a thing or even pointing it out to you, but that was the year that I left BlackBerry and I joined Apple. And once I entered the empire, well, I think I had something to do with that. So to all you holders of Apple stock, you're welcome. All right, kidding aside, now Apple's $1 trillion stock valuation has also moved up not just from their iPhone sales, but from their App Store purchases. So now I'm going to go on record here and say that I bet anything, a ton of that earnings from the App Store is crap. Now, how dare I say that? Well, let me explain. It's not crap in the sense that it doesn't exist or that it's made up. It's just not necessarily authorized. I can't imagine I'm the only person in the history of the App Store that has had their credit card bilked for fees repeatedly, no matter how desperately I tried to cancel them. Has that ever happened to anyone? And if so, have you ever tried to contact someone at Apple to get it resolved? No such luck. It's just like back in the day when cell phone usage was by the minute and you got hit with roaming charges. I didn't roam, and countless roaming charges appeared on my bill, and I'd called Sprint back then, and they wouldn't do anything about it either. Now, I would not be surprised to see some class action lawsuit, and they settle for some nominal number, meaning Apple, not necessarily Sprint, maybe Sprint, but who knows, and no one thinks of it again, except for the attorneys that make $400 million from it. Okay, on to more productive things, like job data. The second key to the macroeconomic picture that financial intelligence students know how important is that job data. Now, numbers rang in below the 190,000 forecast at 157,000, which is still a healthy number when revisions are factored back in. That's leaving the 3-month rolling average at 224,000. Now, I think the real focus, though, should be on the year-over-year wage growth at 2.7% for the second straight month. Why do we care about this? Because that's the inflation figure that's sub 3% that keeps the dove in hawk's clothes. Can't take credit for that great line again, by the way. That's to my colleague Scott, but we discussed a little bit about that in last week's or earlier in this week's post. So any questions, go back and take a look at that. Now, onto the market. This week, we've seen a great rebound in some of the beta names that took some hits. Last Friday's action and the Monday follow-through, well, they were ugly. Well, averages held major support and they zipped off of them, starting the repair process of all those leaks in the dams that I said had sprung. This is why I preach that portfolio management and trading, well, they're two totally different animals. That day-to-day noise, well, it's just noise. It shouldn't allow you, though, to give you this false sense of permanent security if you're looking at it from the portfolio perspective. You've got to be aware when to make changes and why to make changes and when they're appropriate, not just on noise. And that's what we teach in our financial intelligence training class. So if you're looking for that type of information, check us out. And remember, if you're trading involves a substantial risk of loss. It's not suitable for all investors. And if you like charts like I do, remember past performance is not necessarily indicative of future results. I'm Abaroa. This is Financial Intelligence Training. Have a great weekend, everyone. Thanks for watching.